Welcome everybody to another Learn It Live webinar event conducted by FX Evolution. My name's Thomas Atkinson and we're joined by Tyron Abella. How are you, Tyron?
Hi everyone, good, thank you. And we're looking forward to getting into some scalping techniques and day trading with price action. Often a very favorite topic of ours, and a lot of people certainly love it because it gives you opportunities to trade many different markets. So yeah, looking forward to getting into it.
As always, I'll just quickly make sure everyone can hear us. If somebody could just post in the questions room just to make sure that they can hear us, we can get started. So today we're going to be talking about how to day trade Forex using price action. Price action is, of course, one of the most popular techniques, and rightfully so. It forms the basis of so many great trading systems, and it's a great first thing that you want to look at, and then you can bring together your indicators and your other reasons to be in a trade after getting that initial kind of confirmation. I just want to let everybody know that the information contained in this video or webinar today is generic in nature and for educational purposes only. The information does not take into account your personal objectives, financial situation, or needs. And of course, it should be considered no kind of recommendation or solicitation to buy, sell, or participate in any particular trading strategy. So as we always have been talking about over the last couple of months, there are two really great trading groups that we recommend that everybody gets involved in. One of them is, of course, Pepperstone's one. Pepperstone's Telegram. We'll post the link in the description and the comment section now. And basically, this is a great source of daily news feeds, especially if you trade indices, Forex, and commodities. Every day it's updated. And then we also have our trading Discord, which has got the link there down below. And we'll post that a little bit later, along with our free trading cheat sheet. So you can get both of them at the same point. So what are we going to be covering today? Well, we're going to be covering how to set alerts in MetaTrader 5 using Pepperstone's tools, which is one of the topics that everyone always asks about, and very important. Now, one thing you never want to be doing as a trader is ideally you'll actually set key levels, and then if you're day trading and not so much scalping, you can afford to not necessarily be in front of the charts all the time. You can set key levels, set alerts, and then walk away and come back when you have alerts hit. And the beauty of that is that you can have more of a flexible lifestyle. Remember, being a trader or being an investor, the ideal goal is to make enough money for you to maybe be able to quit your job or to be able to do it on a full-time basis, but you still want to have a lifestyle. And I can attest to when we first started trading and I was scalping all the time, I was working 10 to 14 hours a day every day of the week in terms of 5 days. And I was always wrecked by the end of the week because of the amount of screen time I was doing. So day trading can help to certainly alleviate some of that screen time. We'll also be taking a look at some live chart analysis of some popular Forex pairs today. And we'll be looking at combining short and long-term timeframes. In particular, talking about change of trend and reading it from price action standpoint. So many people don't do this, and it's a big value point of, I think, why everyone's going to enjoy today's webinar and video. And of course, then the live Q&A with our team. So we'll try to answer as best we can, as many questions as we can. So, Tyron, I want to start with this question for the room and a question just in general, and that's asking the question, what type of trader style suits you? So day trading and scalping can sometimes become blurry. I think of scalping as somebody that is sitting in front of the charts for a dedicated period of time per day, usually around an open, maybe London Open, US Open or Asian Open, and they have to spend really every minute in front of the charts because they're scalping. They're on the 5 minute, 1 minute, 15 minute, up to maybe 1 hour time frame, getting in and out of the charts very, very quickly. If that sounds like what you want to do, then that's great. But if you want to take it to the level where you want to pull back a little bit, be able to set alerts, have maybe less of a stress environment, day trading is also a great opportunity. And then, of course, you need to think about how much time can you dedicate to your charts a week, and consistency is going to be the key. Sometimes the stock markets and the currency markets are going to provide great opportunity, and that week is just going to be the best. But being consistent and being able to say, I dedicate Tuesday, Wednesday, Thursday every week at this set time for this trading style, allows you to break down and become expert at that particular field and become an expert at that currency or that commodity or that index during that period. Even trading times of the day, currencies will react differently. So Tyron, I mean, what do you think about consistency when it comes to trading?
Yeah, it's definitely one of the most important components, because consistency is basically what makes technical analysis work, really. Like, it's repetitive behavior of markets and basically chart patterns that actually make it work. So, what you need is that consistent base where you do the same things over and over again without having to, rely on, basically changing it up. What a lot of people really fail at, and we find this a lot, is that, if people have a bad day or a bad couple of days, they decide that they jump on YouTube and start to try and find the next great trading strategy, and they completely start changing everything up and completely blowing up what may well have been a really good strategy. So it's really important to, one, obviously identify a strategy that works in a particular market, but then actually being able to consistently stick at it and know that in the long term it will work out for you. That's really, really important. So you're not changing it up, because you could spend years, and a lot of people do, changing it up, trying to work on different strategies because you think one's not working because it has a bad week. There are going to be weeks where the market just doesn't play the game, and I think you need to be aware of that. And when you trade certain times, like Thomas suggested, you do become very, very familiar with what particular currency pairs, indices, or whatever it is you're trading do, and you pick up that particular behavior. So you actually know and identify very early when it's behaving in an abnormal way, and that's your signal to step away.
It certainly is, Tyron. And look, I wanted to talk about the times of day and becoming good and talking about that abnormality. So right now in the markets, we're seeing extreme times with extreme volatility throughout all pairs. Now, I wanted to just quickly bring up this news event thing, because if you're a scalper, a day trader, or even a swing trader, or even a long-term investor, you need to be aware of news like this one down here, which is, of course, the federal chairman of the US, in terms of the Chair Powell speaking or talking about anything. Now, this week, there is key news events, and there's US GDP actually coming out on Thursday. So if you weren't aware of that, and that comes as a surprise to you, then you need to get an economic calendar and make sure that you're paying attention to these kinds of bits of information, because right now, key bits of economic news will impact heavily currencies, increase volatility, break key levels, and we'll talk about key levels tonight when we go into these live charts, and you'll see a lot of very cool break zones that have happened, and they'll give you the opportunity. But you don't necessarily want to trade the news. What we want to do is we want to trade the confirmation of the news. Remember, the news will push to new levels, and then we want to be where the money starts to get in, the smart money starts to get in after that news event when key levels break. I think nothing can get more from that truth than when we talked about Tuesday, and I think it was Tuesday, maybe it was Monday, I can't remember now, but basically you had the White House, one of the White House key talkers coming out and saying US-China trade pact over. The stock market, the currency markets all started going in one certain direction, and then a few minutes later, oh wait, sorry, that was taken out of context. That is the reason why we don't necessarily want to be trading news. We want to be trading breaks and confirmations of levels. Because imagine if you were, and I'm sure a lot of people unfortunately got burnt by that event, where it goes in one direction and you think, okay, this news, let's go in the direction we believe it'll go in, which of course indices would be down off that news. And then all of a sudden, oh, that's not the way it was taken out of context. That's the problem with sometimes news events. So trading pairs that you can best start with, things like gold, obviously, all the cross pairs, so heavily underutilized. Pepperstone has an amazing offering of different gold pairs. So we have gold odd, gold euro, gold pound, gold Swiss. All of those are now in your platform. I'll show you how you'll see those in MetaTrader 5 if you aren't aware they're there. And these particular pairs sometimes offer better opportunities than gold US dollar when it comes to trading them. So you actually see better opportunities. And we'll talk about gold odd and gold US dollar in a few minutes, how gold odd provided a better trade initially, and then gold US dollar provided a better trade this week. And many people are probably on that. US dollar majors, obviously you want to stick to all the major US dollars as a day trader. And indices are also heavily underutilized. ASX 200, S&P 500, German 30, FTSE 100, all great indices to look at, and there's many more. And of course, even some major crosses, Euro Pound, Euro Yen, Pound Odd, depending on the time of day that you're trading, all of these make a lot of sense. So times of days for day traders, very similar, I think, to a scalper. What you want to be looking at is you would like to see times before market session opens, focus on the pairs around those times, e.g. Asia would be Japanese yen, it would be ASX 200, all of the kind of markets that open during that time. That's when you're going to see more trade and more technical analysis breaks, and then you can use the price action to set up trades for that day. So it makes sense, and it's definitely something you want to look at. Look at daily and 4-hour closes as well to get direction of the trend or key break areas. And we'll look at those in the charts in just a minute. So setting alerts in MetaTrader 5, whether you're a breakout day trader or a range bound strategy or a trend-based strategy, we all want to be setting alerts. Now, one of the things that Pepperstone have is they've got this smarter trading tools thing here. And if you have a funded account, I believe, you can get access to this. It's as easy as that. You can ask your Pepperstone, sales representative, and they'll be able to help you out. And you have all these different kind of setups. And we've talked about these before, but one I want to talk about today was Alarm Manager. So MetaTrader 5 does have inbuilt ability to set an alert, but we've also got this Alarm Manager software where we can go in here and we can set things like price alarms for certain levels. So let's say we wanted to select the US dollar yen, which is the currency pair we're on right now. We could drop down all of the different lists, have a look at all the different alerts we want to set, select US dollar yen, select bid or ask or mid, we'll just go with mid, and then we can select whether we want it to be greater than a certain price, equal to a certain price, under a certain price, or equal to, all of these things. So we might be able to say, okay, we want it to be greater than or equal to, and maybe we want to see it break above this 106.64. So we can then go down, we can select different types of triggers, we can set all account alarms, add the action, whether we want to play the sound. You can even set up SMSs, but you need to use a separate program for that, which there is some information about, and you can just search the company. Or you can just set email, which is easy as that. So you put in, let's call it Pepperstone test, and then we'll just call it, I don't know, we use a standard like kind of Gmail kind of idea. And if we then put in what the subject was, which could be US dollar, yen, RR level, or whatever we want to be calling it, we can put all that information in, add that, and then save it. And then what would happen is, of course, once we put in the right price, if price went above that, it would actually send us an email alert. So it's a very good tool to be able to do this. So we can put in 106.65, we want to be greater or equal to, save that, then turn it on, and pretty much as easy as that, we have set an alert using the Alarm Manager software. So very good, and you want to have one of these. Whether you use this one, you use the inbuilt one into MetaTrader 5, or whatever else you might want to use, it's good to have one of these. It saves a day trader a lot of time. And Tyrone, what do you think about alerts? It's amazing, isn't it?
Look, when we first started, sort of 8 and 9 trading forex, we could only dream of these sorts of things, really. Like we made it our mission to stay awake around the clock, trying to wait for particular key levels to be reached. And if we wanted anything like this, we literally had to get programmers from Russia to basically create it for us, and they never really worked all that well. So yeah, having these at your disposal is just unbelievable. The alerts is just such an important aspect to trading, because the thing is, what a lot of people find themselves doing is they think they're not going to be around for a particular trade or a particular trade time, so they jump into the market early so that they don't actually miss out. So rather than being able to set an alert or be able to be aware of a market reaching a certain level, they take a bit of a stab at it and say, I'm just going to go from here so I don't miss out, just in case. And that can really bring you undone. So you're having a tool like that. I mean, that's just only one of the tools that the Smart Tools app has, and I know we'll highlight a few of them, different ones in the future as they're relevant to what we're explaining. But the alerts one is a very, very important one. And you saw all of the options you had there. They're just, we could have only dreamt about that 15 years ago. So yeah, definitely use it. It's a really, really good resource.
Yes, alert software is always good and it saves you time. And more importantly, during our busy lifestyles and gives you opportunity to see things that you may not be seeing when you're not in front of the charts. So make sure you do get alert software or use the MetaTrader 5 one like we just saw there. So we talk about on these webinars all the time, and it's just so important. We want to have multi-time frame analysis as a day trader. Even if you're trading a 1 hour, 4 hour chart, or you're trading a 15-minute chart, if you're not aware what the money flow is doing on the larger time frames, then I believe that you're making a bit of a mistake, because we need to think about the market participants. We need to think about who's really placing the large orders and pushing the market. And while algorithms are certainly a big part of the smaller time frames, the big money is still traded on the daily, weekly, and 4 hour time frames. So we want to be aware of what's happening from the top all the way down. Then when we can recognize trending or range bound markets, we can use then our analysis and our price action analysis, and we'll be doing this in a minute together, to work out what we're going to do next. So thing we talk about is we want to recognize trends using price action. We always talk about peaks and troughs and recognizing that change of trend. But what we don't necessarily always do is we don't always bring it down to the chart. So I've got some examples where I want to talk about the importance of change of trend. So change of trend on things like even breakout strategies, things like moving averages, and when you're waiting for trends, maybe you want to wait for the market to come back. You want to buy the dip, let's call it, or sell the kind of peak, and then you want to know, well, is this going to be success? I mean, I'm sure many people have had a trade where it looks great, and then a market will come up and it will hit the zone, and then they say, oh, okay, well, I'm going to buy that now, but then it continues going through that zone, and you think, well, why'd that happen? You weren't waiting for that next step of the confirmation. So here's an example, I guess, using the Australian US dollar right now in the markets. So we have here the 4 hour chart, and I've kind of trapped the Australian dollar just between two levels right now. So one of those is this key support level of 68 cents. And hopefully most price action based traders can see why this is a key level of support. It's a level where we have multiple touches. I always talk about this where I say 1, 2, 3. If you get 3 touches and then it breaks through that zone, it's very significant because the market has clearly been finding support here. The market participants have been buying off it. So if it gets through this zone, what does that tell us about the psychology of the market? Well, the market is weakening. The Oz dollar is strongly weakening versus the US dollar. It has broken a level where it has previously found heavy support, and it's gone through. If you wake up in the morning, you're a day trader, and you see a daily underneath this, you want to be paying attention. It's one of those key levels where you will set alerts and you will then come in and do your further analysis. So first thing we want to do is we want to look at our higher time frames. So we'll actually go all the way to the weekly. And straight away, you go to a weekly, you zoom out, and you think, okay, well, we're at kind of previous resistance over here. We went slightly higher, and then we've found a little bit of weakness since then. We scroll down to the daily, and I've just got a couple of moving averages here. The 20 is a 20 EMA. The green one here is the 200 simple moving average, and the blue one here is the 50 EMA, because I know a lot of people will ask that. So I'm starting to look at this chart and I'm thinking, okay, well, we've hit this resistance. We've got this key looking support here that we're interested in as a day trader. And then we also have these moving averages all sitting off this zone. And then we start to bring together some analysis here and we think, well, wait a second, it's touched this zone many times. We've got 1, 2, 3, 4, where the support has broken and it becomes resistance, even 5 over here. And I know if I zoom out, there's actually 6 and 7. So this key zone of 66.70 is very key in terms of what the market's been doing. But more importantly, if the market was to break underneath this zone, based on our daily analysis, where do we think the market could be going next? Well, one clear case for me would be that it could be going down to this level because it likes to fill a gap and fill a range. Another thing is that when you're analyzing these charts, you're looking at the chart from the perspective of, well, is this like a little channel on this smaller time frame? It definitely could be. Does it make sense that it could come down here if it broke through? Yes, it does. So trading and day trading is about kind of like chess, really. You're trying to figure out opportunities in the future that you can look at. When we're talking about change of trends, we want to recognize an area, like let's say this resistance up here, and we want to say, okay, well, what's happening on the smaller time frames? Let's say a 15-minute. If we're on a 15-minute time frame, we could be seeing something like this, where we've got kind of like a peak here, we've got a bit of a trough, we've got a lower peak, and then we've broken through that zone, causing a lower trough. So it's more of a change of trend on the 15-minute, 30-minute, 1 hour, and that's our key kind of time zone as a day trader. These time zones allow us to get in and out within that kind of day period. We also know it's happening at our key point of resistance. So we bring that together, we start to do analysis, and then we want to bring in our further confirmation tools, whether that's going to be your stochastic indicators, your MACD indicators, your Fibonacci's, whatever you use, you can look at that. But change of trend is definitely highly underutilized. Remember, we want to always recognize our area, find a change of trend. If you're looking at the pound right now, you could make a great case for saying this was leg one, this was leg two. Notice they're very similar distance. In fact, if I took the top to the bottom here, look at this. Look at that, very similar distance. Now, if I took the pullback from here to here, look at that, very similar distance. So then could you be saying, okay, well, I think it's going to go this distance again? Just using pure, just thinking about the market moving in phases, then you can say, yeah, that's a possibility. We would then zoom out on the daily. We would look for key support and resistances around there. And we'd say, well, does that make sense? There was support here, there was support here. Obviously it busted through at that point, support here. It starts to kind of present a picture where we're looking at it. But then we want further confirmation. We would love to see a change of trend. Remember we said before, if you have a market that's coming back and it's coming too far back for you, and then it hits your zone and you think, okay, I want to be in here, and then it just keeps going up and you think, oh, why'd I get in here? Well, if you wait for change of trend, then you won't necessarily be stuck in the trade and in at the wrong period of time. So you can then wait for the peaks and troughs. You will get a slightly worse price, but it gives you the opportunity. And you can be doing that on a 1 hour for this type of trade, or maybe even a half an hour having a look at it. It's just something to think about when you're doing those trades.
Definitely. I'm going to just quickly answer a question that I'm getting a million of. The webinar will be recorded. They always are, and they're always available on the Pepperstone YouTube channel the next day. So generally in the morning. So if you're having trouble hearing all of it, or if it's if you need to leave, yeah, the webinar is completely recorded and it will be available on the Pepperstone channel tomorrow. And we're not doing any individual pairs. I know we're getting a few requests for checking out pairs. We do that in our live market analysis webinar that starts at 9 p.m. So in about half an hour's time. So I'll pop a link in the window for anyone who'd like to join that who hasn't already registered. That's a free webinar, but yeah, that we do that in that one. This is more a teaching one. So we're going to use charts that are most appropriate to what we're trying to get the message across on. And it definitely is going to be recorded. So just check out the Pepperstone channel tomorrow and you'll see the recording.
Yeah, we always do record these so people can watch them as well. So we talk about this slide a lot in terms of channeling markets or range bound markets. The importance of understanding this kind of concept, if you're not familiar with channels, you really need to definitely learn about them. But it's when you recognize a channeling market as a day trader, you're going to need a different style. So really you're going to need a few styles to complete your day trading style, I guess, kind of complete tool set. One of them is you're going to need some kind of range bound strategy. A range bound strategy is different to a trending strategy. So the second one, you're going to need a trending strategy. And then you're actually going to really need a third one, and that's probably going to be more based on your breakout strategy. And you'll really need these, I think, and I think Tyrone would agree straight away, that if you don't have an idea of how to trade these types of different concepts, then you need to start bringing it in, but also don't necessarily just go trade it. Trade what you know and what you know works. Be patient and don't have that FOMO, I guess everybody says nowadays. Ty, what are your thoughts on these three?
Yeah, most definitely. You have to have, you must identify the market you're trading in. There's no question about that. It's very, very important. And then identifying, look, going with the trend, is important regardless of what the market is doing. Because even in a sideways market, regardless of the range that you're operating in, there is a trend at some point. And if you're looking at a channel, say on a 4 hour, and the market's moving sideways, and you think, well, there's no trend here, there's nothing to see here. You only have to go to a 5-minute or a 15-minute chart, especially if you're scalping, and there's going to be trends inside that channel, no question, there has to be. So it's really, really important to understand the market that you're in, but probably just as importantly, we've mentioned it a couple of times now, knowing the sort of trader that you are, to be able to actually act on what you are seeing. So that's probably the really important takeout from that.
Yeah, you need to know your style, that's for sure. So role reversal, another great day trader. It's more of probably a swing trader's tool, but role reversal can still give day traders the opportunity to find key zones. So let's say we had this example here, and we use this example all the time. As a day trader, you're going to want to be in and out of the market within a day, ideally. So what we are seeing here is we're seeing very key resistance. And then what we can say, okay, well, that key resistance is going to potentially act as support, or what we call role reversal. So if we see the market interacting with the zone, or we've ever seen, remember we said before, 1, 2, 3, 4 in this case, when it breaks out of that zone, there's actually a little 5 here, it probably on the first touch back down to this zone will find buying support, because buyers are going to see the breakout and they're going to buy the point of resistance, because that is the key level. So what you can do is, this is a 4-hour chart. Well, as a day trader, you might be able to go into this time frame and look for a 15 or 30-minute change of trend, or COT as we'll call it here. So if you find that 30-minute or 15-minute change of trend, then you can then buy that. And where are you going to take profit? Well, we're not going to be looking for the whole move, because that's not our plan. We're not going to be in the chart for that long. But there's no reason why we can't take it off at the previous highs. We have resistance up here. We know it's acted as resistance twice. Why wouldn't it act as resistance again? It's a great take profit that the price action based trader can use. Over here, same kind of thing. We could be buying it. Now, you might have a rule where you say, well, I want it to get up to this take profit. If it doesn't, and it's beyond the day or whatever time frame I might have, maybe you close it. Maybe you just say, well, I am a day trader, but I'm still going to take it to the correct level with my correct stop loss, and you end up being successful over here. So this is just a basic kind of concept, but as a day trader or as somebody that's looking at the charts, it's about seeing this on the bigger time frame, getting down to the smaller timeframes and looking for the opportunity. As Tyrone mentioned before, you might see a channel range-bound market. You could go down to the smaller timeframes and find the opportunity within that range. Here's the same thing. So I have this slide all the time. Do not FOMO, or don't FOMO. Day traders, scalpers, more susceptible to the psychology of the market, more susceptible to the optimism, the excitement, the euphoria, and of course then the fear, the depression, the desperation, the panic, all of that types of things. So you don't want to be experiencing really any of these things. You kind of want to be, if we could draw a line through the middle of this and just call that neutral, ideally you'd be like a robot. And then in fact, I had a question in the room before, and I think Tyron's answered it. And basically that question was to do with, what about using algorithms instead of actually doing it ourselves? So it's good because in some ways a robot won't have any emotions, but also it's hard to teach a robot price action correctly. So price action is about finding key zones and understanding the psychology of the market. Whereas with an indicator, it's obviously a mathematical kind of equation that you can easily put into an algorithm. So do indicators work better than price action? I would argue price action works the best. It's the lead indicator. Indicators won't lie, but indicators are lagging what the price action is telling us. So Tyrone, I mean, you would say price action is the key, wouldn't you?
Yeah, price action is always the key, because like Thomas said, it is the leading indicator. It's the one that is going to give you what is more likely to happen. And it's also the most relevant because it's giving you information that's happening in the here and the now. So indicators are definitely, yeah, they have their place, and we use them, no doubt. But they are lagging. They don't lie, but they can be definitely delayed. Okay, so that's why price action is giving you the here and the now, which is very, very important, obviously, for scalping and day trading strategies, because you haven't got the time to be just waiting for areas to be reached. So for scalpers in particular, the price action is absolute king. When you're starting to go into the longer term, week to 2 week, 3 week trades, when you're starting to look longer term, indicators certainly play a far bigger role in that sort of environment, because you kind of need the previous history to really dictate what's going to happen. Price action is great on the bigger time frames as well, but it's not that it takes a back seat, but you certainly use indicators to a lot more power when you are making those bigger, longer term decisions. But in terms of scalping and intraday trading and basically just trading very small ranges, price action is absolutely king. It always has been, and that will never change, because it is the one true leading indicator that you must know about. So understanding how candle formations work, how the dynamics between the buyers and the sellers is actually working out, is a really, really important concept.
Funny you say that, Ty. In fact, you said trading dynamics, and we're talking about key psychology points as well. Here we have the ASX 200 indices. So index, in case anyone's not aware of it, it's the top 200 stocks in Australia in terms of market cap size. So notice how the market has found resistance multiple times at the point of 6,000. As a day trader, we would be looking at these key levels. We'd be looking at 6,000, and we'd be looking at opportunities to potentially short against that, purely because we know it's a key psychological zone. If you see things like change of trends, if you see other kind of key reasons that are price action based to get the market down, then we could be doing that. On the other side, we recognize over here that we've got some key resistance, which is now acting as key support. In fact, during that big sell-off that happened when the advisor said the wrong thing, and the market went all the way down here and then quickly bounced back to that 6,000 zone. So it's basically in a channel. We know this by looking at just the 1 hour time frame.
And I think that brings up a really important point. Actually, sorry, it just does bring up a really important point. When the market is confused and it gets spooked by, basically a comment just like we had on Monday, it does generally gravitate to the first serious level of support or resistance if it's going up. So in that instance, you can see it basically pulled up right on the bottom of that channel. And that's because when a market is confused, it is going to gravitate very heavily to the really key support and resistance zones. So identifying them and knowing where they are is a very, very important part of any trading strategy, no matter whether you're scalping or what. What you don't want to be doing is not knowing where your support and resistance is and trading straight into a heavy support or resistance zone, because you're putting yourself at a significant disadvantage immediately. So you really need to understand your support and resistance. But also this little channel here that we're talking about, you can see all the little mini trends that have happened inside it. And this is only on a 1 hour. If you take it back to a 15-minute, you'll see that, you're going to see little trends everywhere. Look at all of that is basically being all very tradable. All the methods that we use, pullbacks to the 20 moving averages, the crossovers of the moving averages, everything that we always teach is being played out on a 15-minute chart in a very, very strong channel on the ASX 200. So it really gives you a good idea and a good understanding of, when you know the market you're trading. Even though we're scalping here, we're using a 15-minute chart to basically scalp and day trade. We've got our bias on the daily channel, knowing where our zones are. So we're using the bigger time frame to confirm what we're seeing on the smaller ones, and it gives us the opportunity and the ability to trade in the direction of where we want it to go. Obviously, when we're going long and it's in the middle of the channel, you know where we're going for. We're going for the 6,000 here, clearly, right? Look at that double top at the 615 at the 616 on the ASX 200. Like, seriously. And then the retest of it, if you don't mind. Like, it's just, everything works in its own time frame, and that's the beautiful thing about technical analysis. I mean, you can see the retest of the neckline, down it went again. It's a really, really important thing to know that when you do understand the nuances of the patterns and the candles and how they're working in sync with the bigger time frames, it makes trading so much easier.
The importance is being able to recognize those key zones, as Tyron said. But I'll give you another kind of breakdown of this chart. And it's the reason I want to bring it up so much is if you want to be a day trader and you want to learn how to do it, well, we've recognized a range bound market. It's not going to always be range bound. You might have a day where the market comes up, it hits this level, and you potentially get in a sell for whatever reason. Okay, there might be a strong reason for it to be in a sell, and it won't work out. That's statistics, that's trading. But when it gets through and it confirm closes above this channel, do you think you're probably going to hit your stop loss and you'll be out and you'll be a little sad? But at the same time, do you think that we should stop trading this pair? No, you shouldn't. You should be taking advantage of what a channel is telling you from a price action based standpoint. It's telling you that this was the range and this range should be extrapolated out as based on channel take profits, and you should be looking for the next level. So you should actually reverse your trade. And this is one of those key cases that you will reverse a trade and take it long. And if you can't get past that psychology, it's going to be tough to become a day trader, Ty. I just think it is. Yep. You have to be able to reverse. It's tough.
You do. And the one thing too, look, I've got a question. It probably coincides with what we're talking about here as well, and I'll answer it live because I think it'll benefit the room. How long can the channel last? Well, that's a really, really good question. And a channel can last basically a very, very, very long time. We trade them until they break and they're well and truly broken. And then when they do break, they present another opportunity anyway. But just to highlight how long a channel can actually last, what we'll do is we'll actually take out this ASX 200, we'll pop it onto a daily, we'll leave these channel lines set up. And I want to show you a time a little while ago now where this particular channel, I think the channel that we're in right now, well, I think we have to go back a fair bit.
I don't have that much data here.
You don't know that much data? Can we go to a weekly perhaps? Will a weekly bring it up?
I don't have the data here.
Okay, MetaTrader 5 doesn't have it, but I encourage you to go back for the people here who have got enough data, go back on the ASX 200 and draw up a channel between 5,700 and 5,900, and you'll see a period over 18 months where it spent 18 months inside that zone, where it literally very rarely deviated out of that 200 point zone on the ASX 200. So that gives you some sort of an idea of how long a channel can really last. So, and this particular channel that we're trading right now is a really, really important one.
So I've got a question here. Good day, I think it says. Is it advisable, or is it something that you would do where you would trade looking at the 60-minute and 15-minute timeframes in conjunction with the daily timeframes? Yeah, that's fine. I mean, all you're doing with the daily really is, I understand that a day trader wants to be in and out ideally relatively quickly within that day. So what you're doing is you're analyzing the daily closes, the daily timeframes, and figuring out the direction that you want to be in. Here's a great example on the pound recently. So some people will call this a pin bar. It's a shooting star in terms of technical terms. I'll just quickly highlight this one for everybody here. And it's in the direction of the trend in terms of the smaller timeframes. This daily is key. But the biggest point about this daily is actually when it closes below the previous day. So when it closes below this time, there will be an opportunity for you to say, okay, the market is continuing in the direction. Can we find reasons on the smaller timeframes to get into this trade? That's what you're really looking for when it comes to trading or doing day trading. You see an opportunity like this, it shows weakness over remember, a day is a day locked in time, a whole 24 hours of trading, of market sentiment, of market psychology. You want to look at every candle as it's a war over that time frame. When we understand that, we can see who wins and who loses, and we're understanding, well, that person's the winner. Are they showing us an opportunity for what's going to happen in the future? And that's what you're thinking about with each candle. So very important to do that, and it's a great question. So yes, you can definitely learn off the daily and then go into the 15-minute and 60 minutes, no problems.
And it really highlights an important point, because a lot of people ask, which is the most important time frame? And we always consider the daily the most important time frame, because predominantly that is representing a period of time where every major market open in the world has a chance to basically have their influence on that particular pair or instrument. So you've got every single trading session. You've got New York, you've got European, London, the Asian session. Everybody's had a say. The buyers and the sellers all around the world have had an input into where that candle has closed and where it opened. And that's why even for the 15-minute and 1 hour scalpers, it's important to know what the daily sentiment is from the day before to understand what the traders around the world are actually seeing. And that's why we always look at the daily. There's never a situation where we're not looking at the daily, at least to get some sort of an idea of what is happening or what has happened just previously in the previous day.
So Tyron, I think it comes, I'll just send this to everybody. If you want to get our free trading cheat sheet in terms of patterns, as a price action day trader, learning your patterns is great. We actually have a quick cheat sheet where we've broken down some of the most popular patterns and the ones that we use on a daily occurrence. So I had a question here about what is the most popular candlestick pattern in terms of reversals. Well, some people would say, of course, it's the hammer or the shooting star in terms of, some people would also know them as pin bars. They're good, but actually statistically, they're not that great. It's more about having multiple candles telling the story. Remember, Tyron was talking about that 24 hours is everyone over all the different time frames of trade coming in. If you see evening stars and morning stars, they're very good candlestick patterns for reversals, especially if you see them and they're appearing at the tops or bottoms maybe of certain patterns. So double bottoms, ascending triangles, inverse head and shoulders are all excellent. There are also flags, but I would say as an aspiring day trader, if you were looking at just these ones and the obviously opposite versions of them and the channel, you would do quite well with your analysis. There was a question before about fake outs into news of these things. Yes, as a day trader, you're going to need to look at your channel or your pattern. So let's say we had the ascending triangle over here. So we'll just quickly erase all of this drawing and then we'll talk about how to deal with that kind of fake out. So one thing is we've got this ascending triangle. What's it telling us about price? Well, it's telling us that price is strengthening and failing to make lower lows. It's making equal highs and it's making higher lows. So as it comes into the break, let's say we had some PMI data, okay? Pretty cool data, not the most important data in the world, but important data. So the PMI data breaks it through on the 15-minute time frame. This pattern, however, is on the 4-hour. And that is the best place for us to see it. Should we as day traders be taking the 15-minute breakout, the 1-hour breakout, or the 4-hour breakout? We actually have to wait for the 4-hour confirmation because that is the time frame where the pattern looks the best. It is the most important time frame for us to be looking at. So we want to do that. We want to wait for our 4-hour break, and that will avoid the noise that's going to be caused due to this PMI data. The PMI data could be like this, bang, and it ruins your trade. Naturally, you should be reversing it here and taking it short. But if we wait for the larger time frame to confirm, we can then wait for it to confirm and potentially take the roll reversal level on the smaller time frames, on the 15-minute, 1-hour time frames. We are usually going to get another opportunity. Remember, we mentioned don't FOMO, very important in this case. So price action patterns, all of them are really great. Obviously, if you see them on larger time frames, they mean more, but they're great as for tools for day traders. So I think it's something you want to be looking at. Just quickly, again, we do have, of course, these trading groups that you can get access to, and we posted them in the chat room a few times, so make sure you look at those. What market conditions do we look for as a day trader? We always want to have the economic calendar. You want to know that Mondays are actually pretty bad trend trading days. They often have fake signals. So think of trading Tuesday, Wednesday, Thursday, the best days of the week. They are the best day trades of the week for sure. And then of course you want to know the time of year. If you're trading Christmas Day or around there, there's just not going to be as much market volume. And you need to be aware of that. If you go through the charts and you look at periods of time between just before New Year's and pretty much just after New Year's, you'll notice there's sometimes some extreme wicks. And that's because there is so little volume, sometimes the market actually can be manipulated, even currency markets, which are so big. Risk reward as a day trader, obviously 1 to 2% of capital, no more per risk. We want to be trying to get big rewards to our risk, as in at least 1-to-1 or better. and it's very important to do so. Before we go over to the Q&A, I just want to let everybody know that we do have a 50% off deal at the moment on our course. If you want to learn more about day trading, you want to learn more about price action, we've built a pretty robust community over the years with hundreds of active traders that are in this private Discord group. And basically, we have content every day of the week. So we have not only huge amounts of webinars, which we go through, and of course, we've got the ones that we've done here with Pepperstone as well, and that's on their channel. But we also have our Pressic planning system, our Pressic account builder. We have Monday, Tuesday, Wednesday, Thursday, and Friday analysis of the markets and Q&A sessions, and you can ask all of that stuff. So for Pepperstone clients, we have a special deal. It's basically works out to be about $50 a month on a 6-month subscription. We'll post it in there. If you're interested, definitely worth checking out. We've put a lot of effort into supporting the community, and I think our Google reviews and everything else, and even this webinar today, hopefully shows everyone the type of content that we like to push out.
It's the perfect complement to the Pepperstone's Telegram group, because you get all the news feeds and all the important things happening from the Telegram group, and you can get to discuss the trading opportunities in the Discord. So having them both is really, really important, because you're getting the best of both worlds from everything that's basically happening.
So I've got some questions here, Tyrone, and I think hopefully people did get some value out of that. I think the key takeaway is figure out the style that you want to be. Remember, day trading involves multiple hours a day, maybe not as much as scalping. Scalping is the most time intensive. Day trading is the second most time intensive. And if you're somebody that wants to spend half an hour to 45 minutes in the front of the charts, and that's all you can dedicate a day, consider swing trading. They're all great. They all work well, but they are all different types of trades, and you need to just be aware that you're going to have a different style, but you can use the same kind of price action methods and patterns on each one of them. So, all right, let's have a look here in terms, it is 50 Australian dollars, yes. For anyone that's overseas, technically it could be cheaper. Dollar's not worth as much as it used to be. I remember shorting the dollar when it was parity and above. Even Soros was in there, George Soros was in there. It's a great channel, actually. If you go look at the channel on the weekly and look at when the dollar went, Australian dollar went under the parity, you'll notice there is a massive channel that went on for well over a year. So as Tyrone said, channels can go for a while.
And they're very
what are the chances? Here's some just quick questions. When you're scalping on a smaller time frame, 15-minute or less, how do you determine in terms of price action to enter trades? Great question. You'll be looking at finding key support, key resistance areas. Then I like actually trying to trade with the trend. So look for the pullbacks, get your Fibonacci retracement tool out, look for role reversal areas. And then what you're going to be wanting to do is, even if you're trading a 15-minute, look for 1-minute change of trend. Look for a few periods down change of trend. It can work quite well. I think Tyrone already answered that one. There's so many questions here. What are the chances to break a multiple tested zone and roll over? E.g., if a pair tested multiple times on a 15-minute time frame, then is there a bigger chance of a break? No, but I'll tell you one thing. If you see, let's say, 6 touches to a zone, and then that zone breaks through, Ty, would you say it's more explosive?
When it does eventually break through, it can be, but the more conservative entry is generally the retest of that zone. So there are 2 ways to do it. If you're there and you actually catch that break, that's awesome. I mean, look, when it does break after a series of serious touches, yeah, like most definitely. But when it has been in a zone for a very, very long time, they're the ones that we're probably a little bit more cautious on. So we would prefer that they actually break and come back and retest it from the other end. And that certainly makes it a little bit easier and a safer way to trade it.
I'll answer 2 more questions because we do have that other webinar. Tyrone will post the link in as well if you want to come to that. We do have a quick survey at the end. We really appreciate feedback on that survey. If you enjoyed today's webinar, if you found it informative, let us know. Let us know what you think of us as well. And of course, if you want to see topics, we always want to know what everyone wants. I can guess what I think people want, and so can Pepperstone. but that doesn't mean that we're all knowledgeable. It's always an evolving thing, and sometimes people want to know different things than what even we expect. I'm going to answer this question because it was asked 5 times, Ty, and it was about the importance of, I believe, kind of like a clean area or clean traffic when doing analysis. So important, Theo. It is so important. If you have an area, I'm going to draw it right now, where basically you've got a, let's say we're doing analysis over here, and we see a breakout here, and we go, okay, we want to buy that. And there's some resistance over here, which was, basically it was support and it broke through, and we know that's all it did, just fell off a cliff. And we know this is where we want to take profit, and there's no other kind of moving averages or anything else in our direction. Do you think that this is more likely to happen? It certainly is. The importance of a clean area where there's no crazy bits of technical analysis and other things that could stop our trade is very important. It will be more successful and it will happen generally quicker. It will fill that gap. Remember, a breakout is trying to fill the zone towards the next area where it will find consolidation. So being able to read that's important. Look, thank you so much for all your questions. There are way too many to answer. I do apologize about that. Hopefully everybody enjoyed today's webinar. I know we certainly do, and we love doing these. So thanks very much to the community for following. And Tyrone, I guess we'll see everybody in 2 weeks, won't we?
We will. If we don't see you in the next 10 minutes at our webinar, the link's in the chat window. We will see you in 2 weeks. But please fire away. Please do the survey so we can keep it up to date and do what the general majority of people want us to cover. We want to keep it as fresh and as informative as possible, of course. Just reach out to Pepperstone and let them know your thoughts, and we'll be happy to cover any information that you want us to. Thanks a lot for joining us, and we look forward to seeing you very soon.